Good morning, everyone, and welcome to AKAM's educational webinar series, Smart Finance, Strong Communities. So you all know you're going to be earning 1 CEU with this course. It's 962-6058. Correct me if I'm wrong, Luis. And okay, my name is Maureen Reyes, and I serve as the Vice President of Business Development for AKAM. And I'm pleased to have with me today Yolanda Lopez, our Vice President of Client Finance for AKAM, and Luis Lavandeira, partner in Gerstle, Rosen and Goldenberg, PA. So good morning, everyone, and good morning, both of you.
Morning.
Before we jump in, I just want to, review some house rules. The questions, we have a function in the Zoom, so you could go ahead and put in your questions. Like I mentioned, this is a CEU. And obviously throughout the hour, we will be participating and asking those questions for you. So we're very happy. And this is also a webinar that's being recorded. So we would go ahead and give you that. At the end of the course, please email me if you're a licensed manager. Please email me your license number, okay? Because that way Luis and his team can go ahead and give you the certification of your CEU. So with nothing else further, Yolanda, if you would like to introduce yourself a little bit, and then we'll jump into Luis.
Hi, everyone. I'm Yolanda Lopez. I'm the VP of Client Finance for AKAM Southeast Region. Of course, you probably heard of me relating to the audit work, and Luis definitely know me well. It's a pleasure to be here with you.
Thank you, Yoli. Luis?
Pretty quick, I joined GRG back in May 2001. And since I got in with Mark, I got to work on, the tier 1 management companies, including AKAM. And I did a mix of work for developers and then work for post-turnover associations. And then I have developed my professional life last 24 years or so into the condos, HOAs, co-ops. I'm also a licensed community manager, and I'm certified to teach a lot of classes. This is one of the tops, this one and how to read financials. Typically, we do the budget in summer, and then we do the how to read financials in January for the new members walking into the industry or through elections. And then we have one on forensic and fraud. That one is up and down based on whatever news we get on, 7 channels or 7 news. If there's a big case on the West Coast, we get that request a lot. If there's a big case like the one in Dade County a couple of years ago, we see that increase. So, we have one on taxes. So anyways, very vested in the industry. And I think this class brings a lot of general knowledge to the managers. I know managers for AKAM, they have the back office, or a lot of things that they don't need versus someone else that is doing self-managing. But nevertheless, we think there's value to that because the AKAM is the face, the AKAM is what the board sees as AKAM. So I hope that all of you enjoy this, and as much as you can enjoy a budget class. And we can just dive right into it. Brief intro, like I said, in business since 1985. We do audit review compilations, tax preparations, and then Mark and I do all the forensic engagements, the AUP attestation, things like that, special projects. Turnover audits, we're kind of like phasing out because we see that the value is really into the members after they take over from the developer. Condo hotels as well, that's a specialty. Mark and I do those. It's a lot into shared budgets and shared components and multiple elements, the type of setting that you would see in condo hotels or the other hotels. The classes, the top 4 classes that we teach: budgeting and reserve fraud, how to read financials, like I mentioned, and then taxes. The agenda, we typically try to keep the presentations practical with the open forum. The feedback that I get from you guys is that if you guys get to ask questions, people are really engaged into the class, so sometimes I don't follow the agenda. And I know this has nothing to do with budget, but we always show this because a lot of times there is time wasted because budgets are done without checking the documents of the association and going back to the chapter to see that there is no issues in between. And obviously, you would have to check with legal counsel, but let's all remember that we have structure to follow, and there is a hierarchy to follow. And let's keep in mind, if you are on the 718 or 720, we don't see that many 721 in South Florida. I do see some co-ops on the West Coast. Okay, before talking about budgets, we take time about the basic accounting because a lot of times questions are not necessarily on budget, but on accounting principles or basic accounting knowledge. So a manager, even though he's not an accountant, a manager should know that the financials should be done in accrual basis. That's what is GAAP. We see some associations in Sony Isles that they have a preference for having financials in cash basis. They can do anything they want beside the financials, but as long as they have a set that is in compliance with, number one, the declaration, and number two, with the state, and probably the declaration says that the accounting records need to be kept in accordance with GAAP. So that's why the manager should be able to explain to the board, even though your preference is cash basis, we have an obligation, we have to be in compliance. That's why these financials are produced in accrual basis. Once you understand that, then you get to see the value of why having this in accrual basis. And we have a table that we can share and talk about that table and the difference between cash basis and accrual basis. And you can ask yourself, I mean, this is a budget class. Why am I listening to Luis talking about accrual basis versus cash basis and all that? And it goes down to knowing that the time of the budget is also the time to look for deficiencies in your financials, so that then you use the budget to take action. So knowing the debits and the credit, knowing that you're supposed to have it in accrual basis, then what are my financials? What should I be looking at when I'm looking at this package that I have to use to start working on my budget, Luis, so that I can ask you my questions? So your basic financials that you're going to be looking at are the balance sheet and the P&L. And all management companies have a different way to present the balance sheet and P&L, but nevertheless, those are the same. Some management companies present the balance sheet in fund accounting. So you would have one column for the operating fund, one for the restricted, which might be reserves or a special assessment, one column for an insurance proceed or something like that. So know that having the ability to produce the balance sheet in fund accounting has advantages when you come to budgeting. What to know within the balance sheet? Well, your assets, typically the largest asset in condos are either cash or receivable, and depending on when you renew the insurance, your prepaid insurance. Not so much the contribution on the asset, contributions on knowing the liabilities and how to read liabilities and equity. That's what's going to help the CAMs seeing, oh, my financials show that I have a negative equity. Or my financials show that, yes, my cash is 250,000, but if I see my accounts payable at 200,000 and my prepaid maintenance fees at 50,000, so I have zero cash. That 250,000 that I have, well, I need to use, X to cover accounts payable, and the remaining is just the prepaid fees that the unit owner sent in advance. So the CAM should be able to read that in the face of the balance sheet, because I get this question on a lot of the classes, the face-to-face classes. Managers always say, well, the board is always asking me how much cash I have in the bank, Luis. What should I say? I say, well, yeah, when they ask you how much cash you have in the bank, you say, well, but that cash is took over, and then you go through your balance sheet and you say, look at my AP. My AP is 200,000. Look at my prepaid maintenance fee. I know like 100,000. So that 300,000 that you see in cash, we don't have any cash. We have to pay those invoices that are already delinquent, and the remaining 100,000 belongs to the people for next month invoices. That's the type of knowledge that you should be able to master. at a general level, not in details, you guys are not CPAs, and you guys have a tremendous, back office with a great accounting team to take those tough questions for you. But at a minimum, when you're having a meeting in the association, you should be able to point to those highlights.
Yeah. And Luis, I think here's the practical sense, again, the support system that you have as well. You mentioned it's important, obviously, to get you as a CPA involved, but when you're on the field, you're a manager, right? You're going to have your region, and you're going to have those important support systems. I mean, AKAM, we always do that, right? You go to your regional, you go to Yolanda and say, how much cash do we really have? Because that's going to help you calculate well, I'm sure you're going to come into the income statement, right? But it's going to help obviously give you a very good educated information to the board. So it won't be like, okay, I have $1 million. It's not really $1 million, team. It's not really $1 million. So again, I'm glad you're pointing this out because it's very critical when we talk about balance sheet and how that ties into your income statement.
And especially when they have due froms, and the board is always going to go to the manager and say, what is this due from? So just knowing that that's a true up kind of reconciling account to balance the assets and the liabilities of any specific fund, and that account accomplishes that. And after that, you just call Yolanda and Maureen, and they go deep, micro level with the technical gap explanation to the board or your own CPA. This table, even though it's pretty basic, I'm not going to go through B, C, D. I'm going to jump from A through E. So A is typical cash basis. For cash basis, you don't accrue for anything. You don't record anything in advance. There's money in, money out. So typically in cash basis, these associations that I have in Sony Isles, all these Winston Towers, that there are like 1,000 Winston Towers, they love cash basis. So typically in an association with cash basis, you wouldn't see AR, you wouldn't see AP. Then you go to letter E, and then it's a pretty basic example of a GAAP accrual basis. Well, now you have AR, but you also have allowance for bad debt expenses. And yes, we could have made this letter E extremely complicated, like most likely the way your financials are. We didn't want to spend that much time on that. Letter E would show you, my equity, my phone balance is 20,000, but I'm only liquid really 10 because the other 10 I have it in my AR, that 90,000 AR that I'm thinking that I'm not going to collect 80,000. So if someone comes to you, you should say, yeah, equity is pretty low, it's 20,000, but we're not liquid 20,000. We only have 10,000 in cash because the other 10,000 excess in the accrual basis is sitting to be collected in AR/bad debt expenses. In this case, we don't have AP. If we would have AP, then we would say not even the 10,000 to spend because we have these invoices to be paid. But then again, fund balance wouldn't be 20,000. Again, general knowledge, just to be able to go to the balance sheet, read it, see if you have deficiencies, see if you have your equity that is negative, see if you owe money to all the funds, if you had to use your security deposits to pay for expenses, which is totally a big no. But I know some associations do, and some associations use the funds and then they prepay back before closing the year. Also, again, that should be a no. So get into that habit of reading your balance sheet before really getting into your budget.
And I think, Luis, one of the important factors here is also always consult with the CPA. When you're in doubt, again, being an on-site, you have your management team, but there's, sometimes boards, like to get creative, which I always love it, but we always want to make sure that we always bring the experts because you want to make sure you're in compliance with the state, with the GAAP, everything. So always consult when in doubt these important movements, right? Because you never want to get a liability in your hands.
Absolutely. So then after spending 15 minutes talking not about budget, now we're ready to talk about budgets. So the backbone of the budget is obviously your P&L. And, AKAM has an excellent budgeting tool. The things that the CAM should know, because as good as the accounting team is, they don't have the knowledge that the CAM has on the financials. So the CAM is the one in the best position to foresee surplus or a deficit. The CAM knows the activity, the monthly invoices. He or she talk to the board. They know what the projects might be that they're going to do in Q3 or Q4. So the CAM is the one ready to say, we might close the year with a deficit, or we might close the year with a surplus. And then I know that when you guys do your monthly financials, I believe there is a column that explains the variances and all that. Just read those, even though I know that the CAM is the one providing the information to that. Sometimes I see that adjustments are needed, comments are not updated, things like that. So if I'm a CAM and I follow this guideline, I would be like, okay, so I have my it's August, so probably July financials. So I have my July financials. I have 7 months of financials. I only have to project 5, and I know that the board wants to do this couple of projects that are now funded by the reserve. So I know that my P&L might close with a $20,000 deficit. But because I took the class with Maureen and Luis, I know that if I go to my balance sheet, let me see if I have some equity. Oh, I do have fund balance, so I do have some equity, so I am going to be okay, even though I'm projecting a deficit for the end of the year, because I went into my balance sheet, I saw that I have, somehow a healthy fund balance, and then I went into cash, and I had a couple of questions. I called Yolanda, she checked with me, she told me, yes, that's cash available to be spent, I'm okay in my AR. That's the type of exercise that I will be doing as a CAM.
Yeah. I think
Uh,
also, and you mentioned it was one of the key things that AKAM does, and brings value to the client and to the on-site team, is that we have a section of variances, right? A highlight in our financial package, which is like 150 plus pages, by the way. Not everyone wants to read everything, right? It's logical, but we have a highlight section. So if you review every month your highlight section where it gives you the major variance, this is going to help you to go into the granular of deep diving into each GL and explaining why you're projecting, your plumbing repairs, why you're projecting, your landscaping or whatnot. So again, this is where you really, really partner with your on-site teams to bring that value to the client, because you know exactly what's going on the property. So I think, this is so important of the income statement and understanding your community to give a good recommendation to your board.
Absolutely. So next, you take those 7-month financials, and then you would annualize that, and that's where the budget tool comes into play. The issue or the feedback that I get sometimes reviewing, because even though we have to remain independent, we tell the clients that after they have gone through budget draft 1 or 2, they can call my office and ask for a quick review. I mean, we have to remain independent. That's why we couldn't do the budgets for the association. But we could take a look at the budget and we could give you our feedback. Hey, we think that you should increase, or you are okay not increasing this account. We will be asking you for the latest financials, checking that the adjustments from the prior audit were posted. So we can do that. But this is where the key contribution from the CAM comes into play. When annualizing those 7 months, the CAM is the one that really can say to the accounting team, GL account X, Y, and Z has this expense that should not be annualized, because this expense is not a recurring expense. That is because we had an incident X, Y, and Z in the month of March, and that's why that expense should not be used as part of all the expenses that make up the total amount at the end of July that we will be using to annualize that. That knowledge cannot come from the back office of the accounting people. That can only come from the CAM, because the CAM is the one in the office, in the association, is the one that can go through the GL accounts, and based on whatever comments he or she might have, can really remember that there are some invoices, the association incurred some expenses that should not be part of that exercise of annualizing the expenses. Sometimes we see budgets that are overstated because they fail to adjust it or remove those line items within the GL accounts. Other revenue accounts that should be subject to deep analysis are the ones that we typically see that the budget amount remains the same, even though the association had a negative variance the year before, and maybe even the year before, and somehow the budget amount for those accounts remain the same. And let's just use an easy example. Let's just say laundry income or FOB or vehicles, whatever it might be. So the CAM continues budgeting for 20,000, but actual it's only 15 or maybe 10 or maybe only 5. And we see that the budget amount is not adjusted. Intentionally or not, and I know this is not the CAM, this comes from the board members. The boards might want to keep the budget the same as the prior year. They see the associations as home, not as a corporation, and sometimes they don't realize that you know, the association is an actual corporation, and that the association should be funded for the actual expenses, and that you know, if all the contracts and all the utilities and the insurance are going up between, I don't know, 5 and 10%, so at a minimum the budget should be going up the same. I don't have an answer when people ask me or they tell me that they have been able to keep the budget the same for the last X number of years. And when you go to the actual financials, you see all the expenses going up on an annual basis. So it doesn't make any sense. Another thing to consider are the rollover, the surplus rollover. Back in the days, we used to see associations with a lot of fund balance. I would use the example of Williams Island. Most associations had a significant fund balance, and well, if that's the case, you can use some surplus rollover to subsidize your budget. That's totally fine to do that. My advice is, if you do surplus rollover, you have to be extremely good at communicating with the association what you're doing, so that in the future, when you don't have that excess anymore, to continue subsidizing the budget. And now you have to go up to cover that lack of subsidy that you enjoyed for so many years, plus the actual increase. It will be extremely difficult for you to mention that to an accountant and board member, that all he or she is seeing is, I was only paying X, and now you're asking me for X plus 30%. They don't want to hear, oh, it was because we used to have surplus rollover and now we don't have it anymore, and the insurance went up 10%. All they know is I was paying X and now it's X plus 30%. So if you do surplus rollover, you have to be extremely good at including explanation, comments, a memo within the budget and in the mailing of the budget and in the communication. I would use size 20 bold capital highlighted in yellow. I would make it extremely visible so they see this increase in this budget has been subsidized in part by the equity that we were able to build from inception through this point. And they have to know that, because that is not going to remain the same for so many years. You will come to a point that there is no more equity, and now they have to fund 100% the budget. Another issue that we're seeing is an increase in sales tax audits by Florida Department of Revenue. So if you have some transactions that are subject to sales tax, you should be able to explain to the board that they have to register with the state to file and pay online for sales taxes. And if you have any questions on that, I would recommend to you to email me those questions so that I can connect you with our tax department. I'm not a tax CPA. I've been doing attestation, forensic, budgets, you name it, for the last 25 years, but I'm not a tax CPA. I have a large tax department for that. This next point is about the non-recurring transactions. Late fees. How do you feel about that, Maureen?
I
people
always like to
including
be
that as a budget.
conservative. I am very conservative in my approach when, again, and ACAM's normally very conservative in their approach because you never want to overstate a revenue and say, oh, everyone's going to be late and you're going to be expecting $10,000 because then you're going to have to make it up through the expenses. So I generally like to put zero. But again, that would be the recommendation. But I think being conservative in a revenue GL is it's always
But
best.
yeah, I want the camps to hear that because
Hmm.
most likely you're not going to collect the late fees that you're charging. So if you add a budget dollar amount to late fees, you're just not helping yourself.
Nope.
You will be the one having a hard time for the next 12 months managing that association with a low or negative cash flow, struggling what invoices to be paid, dealing with the phone calls from the vendors because you are so short in cash,
Yep.
and budgeting for line items that you're not going to collect, or budgeting for accounts that you had negative variances and you did not adjust. It's just not going to play too well for you when you're managing that association for that specific budget.
Yeah, and ultimately, Luis, also you want to make sure your community is not delinquent. I mean, that's a goal, right? So
Exactly.
help and again put the parameters, but you never want to overstate an income. I wouldn't recommend that.
Those rental income is a really on and off, depending on the
Hmm.
location of the association. I have seen associations with significant amounts of rental income. Then I have seen associations with a budget line item and not even 10% in actual
Yep.
because the market changed or there is a lot of Airbnb close to the association and whatever the situation might be. So
Hmm.
I would be extremely careful with rental income right now. Maybe it was a thing a few years ago. Right now, I
Yep.
don't think so.
And the other key here is also there's certain, again, criterias, right? And you want to make sure, like, again, the same thing as your contract with expenses. If you have rental income, you have to have a contract in between if you're renting out certain, location or spaces or whatnot, because that's going to help you also when you do an audit, etc. So again, you never want to overstay. You want to see what's the actual. And with late fees, my always recommendation is conservative zero.
Keep it like that. Yeah.
Keep it like that. Yep.
People like that. Obviously, having the knowledge of the contracts and the utility. The good thing about utilities is that there's always something in the news, so CAMs know what's going to happen with the utility rates.
Even they
Um,
they actually tell, like, you go to FPL and they'll give you the projection
yes,
for next year.
yes,
So
because they have to go to the state and ask for
mhm.
that. So typically, because it was the last legislation session, so
Yep.
you get to have an idea. Um, These are the hot potatoes of the projections. Payroll, bad debts.
Yep.
I mean, um, payroll because it is based on uh, demand and the market and the feedback that I have been getting from the tier one management companies is that somehow difficult to get good talent and the salaries have to be adjusted and sometimes the board members might not follow all that and they might push back when they see increases in payroll. I have been in
Right.
presentations of budgets that is one of the line items that is somehow difficult in the meeting. So
Yeah.
have a lot of support, have a lot of backup, document everything, and I think that for the
Yeah.
most part, it's all about communications.
Yeah, and listen, what's important here again, it's personnel. You're serving the community. You and I have had our license for many, many years. So obviously the industry has evolved. Our careers have evolved. And again, each community is competing with the other community. Again, you're doing the best that you can to run the business of the condominium, right? But that condominium is competing with his fellow neighbors. So you always have to keep that in mind as a board member. If you have that responsibility, is like, wait a minute, what is not to say that to go, you're a front desk lead, you go serve as another community for whatever the amount is. What I'm
But
saying
I, but
is you're competing.
my best guess is that is the CAM the one that has and is in the best position to explain that to the board.
Absolutely.
to say, fair market value for an engineer nowadays is X, and the buildings next door pay the engineers
Correct.
X plus one, so we cannot neglect the need to increase the budget for that line item if we want to retain employee X, Y, and Z that has been in the community for the last 20 years, that has tons of knowledge in the community and
Mhm.
and the unit owners. So I versus the CAM that doesn't take the time to explain, that doesn't know how to read this, that is not vested into the budget and the association. I guess that then that CAM would not succeed at explaining the board why payroll in that annualized exercise has been increased by X%. That's pretty much that one on bad debts, because again,
Mhm.
who wants to have bad debts? Nobody wants to see bad debts because it's not an actual invoice that they have to pay. So I even myself as a CPA, sometimes I have been put in extremely difficult positions. Why I'm recommending bad debts in a budget, and it all goes down to cash flow. You know?
Yep. You want to be
If
ahead of it.
I'm gonna use Yolanda. If Yolanda hasn't paid maintenance fee for the last 12 months, well, most likely Yolanda might not pay the maintenance fee next year. So when I'm doing the budget, I'm gonna say, well, it's not 10 of us funding this budget, since Yolanda most likely is not gonna pay. So now the 9 of us have to fund the expenses. So mathematically, the only way you accomplish that is adding that line item, that expense, that expense um,
Absolutely.
in the budget, and then you're kind of like penalizing the people that do pay, uh, uh, increasing the funding to cover for the few that don't pay. And
Right.
unless you are an association that doesn't have a significant AR and that everybody pays within, a month and a half, but most likely that's not the case, you should consider having
Mm.
somehow uh, an amount for the bad debt expenses.
Yeah. And Luis, and I know that again, our ACAM team, normally those are like the great conversations that we have with our boards. And when we are in doubt, we always engage you, Luis. Again, to give that recommendation, because you do want to have a healthy budget. You do want to, as much as you want to have a cash flow in the budget, but it is difficult when you're managing a community and being very tight in a budget, because then you run into these situations that you didn't forecast about that correctly, right? So you always want to have that recommendation. I highly recommend it, like you do, Luis. We do
Yeah.
that.
And don't feel bad reaching out to your CPA.
Mm-hmm.
If the CAM is having a hard time explaining that, and the CAM, should have a professional in the meeting, absolutely reach out to the CPA. Your CPA should be able to assist you with that. Again, the CPA cannot do the budget; he has to remain independent. But to help you explain a line item or two within the budget, I think it's a good exercise.
Absolutely.
Um, an issue with the present maintenance versus reserve, we have seen sometimes line items within the P&L that when we read the reserve study, we see similar line items, and it's kind of like double dipping. Not a lot of times, but we have seen that too. Um, this is an example, something that we got from a manager, and we found it extremely helpful. Obviously, managers have their own formats of this similar document, but this is key. I see, and sometimes I'm copying on those communications, the manager, challenging the vendor and asking, for the consideration to adjust the contract and things like that. I really like when I see the managers engaging in that exercise,
Yeah.
actually earning the certification.
Yeah. By now, they should have already done that in our world.
Yes,
Have
yes.
that understanding, right?
This class is somehow kind of
Yeah.
like late.
Yeah, no, but
Um,
it's the details. It's knowing the details of your contracts, knowing the details of what's, if it's a 3%, if it's flat or whatnot. One of the beauties, that things that we like to, again, is part of the manager's responsibility and obviously the regional oversight, is to put those details. We have a column that says comments. Like you had
yes,
that said
yes.
comment, a cancellation 30 day. Like the more detail the more invested I think you really understand your budget. and
Yes,
help.
absolutely, yes. So the slides on legal and all that, I'm gonna skip that because it's already almost 11:40. And anyways, I cannot provide legal advice, so we have to reach out to legal counsel anyways. These classes, we have to send them to the state to get approval, and it's somehow a difficult process. And we submitted an updated class to adjust for the House Bill 913. This class still has the old language for SB4D. I can tell you, and I think, Maureen, this is a good point to get any questions, because the last couple of weeks I've been doing this class since I would say it's already August, since beginning of July. And we did this class in Fort Myers, Sarasota, Tampa, Orlando, Jacksonville, and we were getting a lot of questions when we got to House Bill 913. And again, a lot of the questions were kind of like legal questions. But from a budget perspective, without me, because obviously I cannot give any legal advice, if I'm doing my budget and I had my Sears and I had an idea of what I needed to fund because of the Sears, and now as a result of the House Bill 913, I know that if my association completed a milestone inspection, I can delay the funding of the Sears for 2 consecutive years to give priority to those line items that were identified in the milestone inspection. Well, that was a blessing coming out of House Bill 913. Here I was thinking, this budget I have to have this much funding because of the Sears study. It's telling me that I have to fund X, and I get this blessing from the state, House Bill 913, saying we have a milestone inspection and you have this emergency request that you have to do. You can put a hold to funding Sears for 2 consecutive years. That's the best highlight from House Bill 913 for me as AKAM when I'm doing my budget. The only change in House Bill 913, even though not related to budget and reserve, is that the deadline for financial reporting has been extended to 180 days. We're going to try to continue with 120 days, but it's really good to know that now, now being in compliance is 180, not 120. There were some exemptions added. I don't know if you think that we should go through that, Maureen.
No, I think it's important that we go through the course so everyone can get their CEU. But what I think one of the big takeaways, Luis, on this, again, when in doubt about if you have to do an updated reserve study, I did this last year. We're not just consult with your association legal counsel to be on the safe side, about your voting, what you need to do or what not. I think that's very important because you want to make sure you're doing your budget with the reserve accurately. So yes. I think that's like the main takeaway in the sense of the law that just went into effect in July 1st.
And one of the best questions that I had in Jacksonville was a CAM that said we were the pioneers. We did the CS even before it was really due, and
we're the good students.
We funded the recommended amount, and we adjusted the presentation in the financials, and so we did all that. And now House Bill comes and says, well, these many changes. It's only for the 3 stories but habitables. Prior to that, there was not a distinction. It was just 3 stories high. So I did it. How can I undo what I did? So nobody, because obviously when we do these classes, sometimes we bring attorneys and all that. And my answer was, I have not seen that since that just happened. Maybe when we audit 2025 year end, we see associations that they implement the CRs and now they want to undo that implementation because either A, they don't have to do it anymore because of the new language, or B, they want to stop funding because they have the milestone saying that they have to prepare X, Y, and Z, and they want to give priority to that. So how do we change our presentation? And so I said, the same way when it came out at the beginning, a lot of people said, I'm gonna wait until the last minute because probably the state is gonna change. And indeed that happened. So now, if somebody already did it, I would recommend not to undo anything, not to change anything, because this might continue changing. Remember, this was kind of like a knee reaction to what happened in Surfside, and it's pretty new in the industry, new for engineers, for attorneys, for CPAs. So the state is trying to, add language as time passes with actual data coming in from the industry. So as long as we stay within the legal framework, I would wait until the last minute to implement because I might invest time implementing and it might change later on. But if you tell me I'm an early adopter, I want to implement now, please go ahead, do it. You should have full support from your accounting team and your CPA, and then you would follow whatever the law is at the moment. This section is on reserves. Maureen, do you remember back in the days when they only had the straight line?
Yes.
When you and I got the AKAM license, there was no pool of reserve, straight line.
No.
So you would
Straight
take any financials and you would see in the face of the balance sheet a lot of line items in the reserve, 20, 15, whatever the case. And then at some point in time, someone decided this beautiful idea of having the ability to fund for a pool of items. And that was the beginning of the pool funding method. So straight line is pretty straightforward mathematically. Line
Very
item,
easy.
replacement cost, remain in life, I divide, I have the amount, I keep on doing it on an annual basis, that's it. The pool requires a study because the AKAM or the CPA doesn't have the knowledge to do a study, to come and review and do all the analysis that engineers do to come up with a research study. And when engineers do that, they have a projection of how these items might behave, knowing that it's not Florida with the humidity and everything that happens in the state. So with that basis, then they come with these projections and they say, well, if you fund for all these line items, that this one might have an expense 5 years from now, but this one maybe 10 years from now, they come up with these formulas and then they give you the estimated projection of how much cash you're going to need on an annual basis. And then based on that, they tell you what the funding should be. So you always have cash in that account. The key here is that sometimes I see managers asking me or emailing me saying, the board wants to fix X. Can they use reserve funds because they have pool funds? So somehow people believe that having pool reserve is a freebie to do anything. And they say, because it costs more than 10,000. Well, you have a limitation because you were only funding for the line items within the study. So you have flexibility, but your flexibility, it's only for the line items within the study. If they want to have something that is not in that research study, then you cannot have reserve funds, even having the pool funding. You would have to use equity, you would have to have special assessment or any other type of funding. The new society is as a result of what happened. This is a long explanation of the pool, what I just said in a couple of sentences. An example of the pool that some people call it cash flow. Those are last columns, 19, 20, 21, 22, those are the projections. And in this specific case, they are saying that road is going to spend $39,000 in the year 2020, and that the roof cleaning is going to happen in the year 2022, $12,800. So pretty basic example of what it would look. And obviously now we add into this that because of Sears, now this pool would have a structural section and then a non-structural section. And that's where it gets really complicated and really interesting. Straight line, like I said, math, pure math, total divided by cost, get the amount on an annual basis. And
Luis, have you seen a lot of the association using straight line still? Because most of our communities are pooled.
No, what I have seen,
You let's see more globally
Yes, what I have seen,
in different, areas, because we're Tri-County, it's Broward, Palm Beach and Miami-Dade, but I'm curious.
what I have seen is some associations that still have the remainings of this, that at some point they change,
They have to, yeah.
but they fail at taking the vote to move the straight line into the pool. Because if you're adopting the pool funding and you're coming from this has to stay, unless you take a vote from the members and then you convert or you transfer the
Okay,
straight line into the pool.
got it.
If you didn't, you have to continue showing this until you deplete this. So in those cases, a recommendation is always when you code a reserve expense, take extra time. See if you can record that within any of the straight line. Don't jump right away to the pool
The
account
pool.
because it's easier for you as account just to code it to GL 6060 and you're done. No, you
Right.
should really try to see if you can make it one of these so that you deplete these before tapping into the one that you
pool.
have flex.
That's a
Because
good recommendation.
these ones you have zero flexibility. That roof, you have to use it only for roof repairs and expenses. So
Good.
research study, also we are updating this as a result of the new
Yeah.
language.
Yeah, Louis,
Yep.
and don't quote me on the dates. I think like 2-3 weeks ago, we did a reserve study. So in our AKAM website, if anyone has, any questions or wants to see the recording, it was a great, well-attended webinar specifically on reserve studies, best practices and all of that. So
That's amazing. That's
Yeah.
amazing. You probably remember this. Back in the days, it was required every 4 years. Then it changed to recommended. And
Yeah.
obviously, when it stopped being required, people stopped doing it because there is an associated expense to that. When it became recommended, then most people were not doing it.
Yeah.
So yeah, I go to a lot of classes with engineers and attorneys and insurance people. And interesting that some of the insurance people are saying you can have the state saying that you have an extension. You can have the state saying that you don't need an audit or that you don't need an engineering study. We as the insurance companies, we are going to penalize you. We are going to take that premium. We're going to penalize the premium if we see that financials are not audited. You don't have an updated research study, and you're not funding this and that. Even though the state might say that's legal, we are a private industry. Insurance is a private industry. They can use whatever they want to use to assess risk and expenses, and that might be the case. I don't know if it was for real or not, but that was not the first time that I heard that comment coming from an insurance agent in an event. So we have to wait to see if that's going to really happen or not. If I would be a AKAM nowadays, I would want to have, all my professionals on my speed dial. I would want to have my research study done, whatever the law says.
Best practices.
Best practices. And sometimes best practices have a cost associated. If best practices is to do something every 3 years, I might be able to explain to the board that that's what the law says. But I think that for my specific community, I want to do it every 2 years. I don't want to wait for that third year, even though that's what's considered okay by the state, because I know my association, I know my unit owners, and I've been in this association for so long that I know that there is value into accelerating this, and I'm going to do X, Y, and Z prior to. Go ahead.
And Louis, and I think and you said it right. What's the value, right? The value. Remember, that association is competing with the next door neighbor with the building. Some investors want to come in or homeowners and they want to purchase in your community. You have to elevate the value. So again, healthy reserve studies. Make sure you're funding correctly. Have cash flow. So always bring on all your experts in because budget season is extremely important. And again, if someone doesn't understand the reserve, we have our reserve experts coming in and speaking to the membership and to explain why the recommendation of, fully funding, et cetera. So I don't want to go into that,
Yeah.
but
And this-
it is important to have all your experts.
Yeah,
We're like
and this-
7 minutes away.
Yeah, this slide is not me selling. This slide, we have it because sometimes managers believe that when they have a budget amount, they believe that they need for the financial is based on the budget amount, and it's not based on the budget amount. It's based on the actual. And what the law says is that you have to use your total annual revenues. And when it's total annual revenues, it's not the budget amount, it's the actual revenues. And it's total, it's not just the operating. If you had a special assessment, that gets into that. If you had insurance claim, it gets into that. If you had a settlement, it gets into that. So when you are working in your budget now for next year, and you're looking at, should I budget for an audit, or should I budget for a review, or for a compilation? Well, know that it's not only looking at your P&L budget amount. You have to look at your annualized operating expenses, but you also have to remember, did I have any type of insurance claim? Did I have any type of settlement? Did I have any special assessment? Or are we going to have a special assessment before closing the year? Because if your total revenues right now are 450,000, and you know that they want to pass a special assessment in November because they want to do some window cleaning or something that is not in the budget and it's not in the reserve, well, you know that before closing the year, you're going to have those new revenues that are not within your budget and that are not within your annualized, actual, because it hasn't happened yet. But you guys already had multiple meetings, and you know you will have that special assessment. So remember,
Correct.
total actual revenues, and a brief explanation of the difference, because a lot of times also members they say, well, I know I'm only required to do a review, but I think I want to do an audit. So what's the difference? Well, in an audit, we do analytical procedures, we do confirmation with third parties. The scope of the work is a lot more than when it's a review. The threshold by the state is $500,000 or more. If you have only 300,000 to $500,000, then you will do a review. And if you have between 150,000 but less than 300,000, you do a compilation, which is analytical work. The explanation that I just said, more language, and I left off 5-6 minutes for questions and
Yes.
any real life comments. Sometimes people bring their own financials, and we spend a couple of minutes going through a specific set financials or a budget. I don't know if you have one of those in the messages.
Yeah, I responded to live questions during the presentation. But Luis, most important, I want to thank you. I think, obviously budget is a super fun for us where we love numbers. And we want to make sure, we provide the good recommendation. I hope, I see a lot of CAM managers here enjoyed it and it's being helpful. I think one of the good takeaways, Luis, is, involve your executive team, involve your experts when you're doing a budget, be responsible. I think the takeaway is also have your regional, review your budget, have your executives, write your VPs, involve Yoli. When you have a doubt, Louis, it's always better to ask questions, no?
I want to add one last comment based on a case that Mark and I are dealing with now.
Mm-hmm.
If you are any of the CAMs managing an association with a limited common element, if you're managing an association with a limited common element, most likely you're going to have also a portion of the budget for that limited common element. And if you have that, probably 99.99%, the declaration has language with regards to that limited common element. And if you had excess in your budget from that limited common element, that excess should only benefit the limited common element owners. Meaning, if you have a budget that was funded by restricted number of people for an element that was to benefit that restricted number of people, any deficit or any excess from that should be funded or enjoyed by those unit owners that are enjoying that limited common element. This case is based on an association that the excess from the limited common element was used with the total excess from the general budget. So then it became something that it was enjoyed by all the community instead of just by the unit owners that were enjoying the limited common element. Just wanted to throw that in. So knowing that if you have a budget, some weird situation, obviously Maureen, Yolanda, or your CPA should be the first one that you should be talking to, even before getting into
Absolutely.
the actual budget.
Yeah. Luis, this is a great question. At what level should the operating account be kept? 2 months expense, more or less? If the balance dips too low, under what GL account should you budget funds to rebuild equity?
Okay, so the P&L for the budget might have admin, present maintenance, payroll, utilities. I see most associations within admin adding a line item, uh, prior year deficit funding, something like that. If I could have the flexibility of adding a separate line, not within admin, I would do it like that. So when I'm printing my financials, even if I use the equivalent to a compact consolidated, being that I don't have the detail of all the accounts within a category, I could see admin, a dollar amount, insurance, a dollar amount, without the breakdown of all, present maintenance, a dollar amount, and then I would see prior year deficit funding, dollar amount. Because if you put it within admin, you might lose that. But that's the most common name that I have seen. And
Yeah.
how much is a matter of how much can you charge the community? You know your community. Typically, CPAs say between 10, 20%, 1 or 2 months. But 1 or 2 months or 10, 20% could be a significant amount in an association with a large budget. So at a minimum a month. So if anything happens, I don't have to rush to the members to go with something because my budget was so tight and my equity was zero that I don't have any cushion for any unbudgeted line item. So I would try to aim at between 1 and 2 months or 10 to 20%.
Even better, 3.
Yeah.
That's not a bad idea. The point is that you have then someone in the board with some accounting finance background, and he or she might say, this is a nonprofit.
Zero.
Ask for the money. Ask for the money when you need it. Why do you need to have so much in equity? And there is a point that if you have to file an 1120 instead of an 1128, if you have too much equity, it can become an issue.
Right.
So
Yoli.
1 to 2
Yeah.
months, 10, 20%, I would stay within those.
Yes, just as an additional comment, when we prepared the first version of the budget template for 2026, we always add for sure an estimate of the deficit at year end. We believe that's very important because if you have a deficit that remains uncovered, definitely is going to result in cash flow problems, right?
100%.
And then if we see that the association is a little bit too tight, even though they don't have a deficit, we always put the comment like, hey, if you want, we can take the opportunity for next year to fund at least some of the cash flow, being half of it, half of a month or a month. And then the board will decide how they're gonna move. But we always include it. It's like to call it to their attention.
That's the best approach. You know, you're
Yeah.
documenting your recommendation, you're explaining the basis for your recommendation. And it's up to them, you know, professionals, they hire you, me. At the end of the day, these are their financials, you know, their associations, and we can only do this, you know. But if we explain the basis of the recommendation, I think that's a good part of the game.
Correct.
Yes. Well, Luis, Yolanda, it's 12:01. It's been an exciting budget class. You know, for those who participated, thank you so much. Please email me, Reyes@akam.com. Luis, you know, I'll be more than happy to put everyone together. Again, if we're not managing your community, we're always here. We're an added resource for you. You know, we just want the best for the industry as a whole. So we're here for you, and thank you for the participation. Luis, you did fantastic, like always.
Thank you so much.